All right, Broadcom stock price is jumping following exciting earnings results when they announced the stock split, but it wasn't all good news for every segment of its business. So here's what investors should know about Broadcom's latest results. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so on the one hand, the artificial intelligence side of the business is thriving, and to help support that business, they are developing next-generation switches, DSP optics that would drive the ecosystem towards a 1.6 terabit connectivity to scale out larger AI-accelerated clusters. In other words, easing up on the jargon, what they're going to do is make it easier to facilitate the growth of these massive AI factories, as they're being called now. These new data centers that are being built, optimized for artificial intelligence. Broadcom will play a meaningful role in that development. So Broadcom saying they expect the strength in artificial intelligence to continue, and they now expect networking revenue to grow 40% year over year compared to their prior guidance of just 35% growth. So we thought this segment was going to grow by 35%. Actually, we now think it's going to grow by 40%. And if you've been watching all of my videos on artificial intelligence companies, this has been quite common, right? I've been saying this over and over again with so many of the companies that I'm reporting on, is they initially thought revenue was going to come in a certain amount, but it turns out much better. They thought it was going to be a certain amount, it turns out much better. And I get seeing this over and over and over again with so many of the companies that I'm following in the AI space. The growth in this category is phenomenal, and as enthusiastic as we've been on the development of artificial intelligence, it's been that much better. But what is happening is the disparity is narrowing. For instance, NVIDIA, for several consecutive quarters, they beat their expectations by a smaller and smaller and smaller magnitude. They're still beating their expectations, but by a lower and lower magnitude. So we're approaching a point where the growth expectations are coming in line. We're not underestimating this development of artificial intelligence by as much anymore. Again, as you're noticing here, just a 5% difference in the expectation for rate of growth. So we're narrowing the disparities, but still 40% growth year over year is excellent for a company like Broadcom that doesn't typically grow at these rates. It's double digit at best revenue growth for this company. 12% in the most recent quarter organic revenue growth when you exclude the impact from VMware. So its wireless business has been the one that I'm highlighting where not everything is going extremely well. Second quarter wireless revenue grew just 2% to 1.6 billion, and they're reiterating their guidance for wireless revenue to be basically flat year over year. So zero growth in this segment. And this is consistent with their continued engagement with our North American customer, not to name any names, Apple, not to name any names, which is deep, strategic, and multi-year, and represents all of our wireless business. So their wireless customer is Apple, and the conversations they're having with Apple suggest flat year-over-year growth based on what Apple is ordering from Broadcom. And that coincides with what Apple has said with its iPhone demand that's been relatively flat since they haven't really innovated all that much over the last couple of years. Now, this year, there is some excitement and enthusiasm for their launch later in the year. They recently announced Apple Intelligence, and if their iPhone gets AI upgrades, that could increase demand in this replacement cycle, which will then be great news for Broadcom. So moving on, their second quarter was at the bottom for their server storage business, which was down year over year by 27%. They expect a modest recovery in the second half of the year, and they forecast 2024 server storage revenue to decline around 20% year over year. So, like I highlighted, you have segments of the business that are thriving. Those are in the AI parts, and the parts with the wireless and server storage connectivity not doing so well. Broadband, again, another segment not doing well. Revenue down 39%, and broadband remains weak on the continued pause in telecommunication companies and server provider spendings. This is the bottom in the second half of the year is what they expect, with a recovery in 2025. Accordingly, they're revising their outlook for 2024 Broadcom to be down in the high 30% range from a previous guidance of just over 30%. So now they're saying it's going to be something like down 37, 38, 39% instead of being down just 30, 31, 32%. So again, most of the segments of the business not doing well, but that's offset by just how much the AI part of the business is thriving. They go on to say that second quarter operating income came in at $7.1 billion, and that was up 32% from a year ago, with operating margin at 57% of revenue. I've long said that Broadcom is one of the most profitable companies in the world, and operating profit margin at 57% puts it at the top of companies in operating profit margin. Remember, Visa is the best at 67%. So Broadcom at 57 is very close to the best in class, which is Visa at 67. So again, very good profitability for this company, and they've sustained this profit growth and expansion in their profit margin for several years. This isn't a one-time very high profit margin, kind of like NVIDIA. NVIDIA's profit margin now is up in the 60% range, but NVIDIA hasn't been here for a long time. They're just now generating these very high profit margins on the back of the exploding revenue. But Broadcom has been very high profit margins for several years now, and they continue to get better. So they have more history of strong profitability. And if you exclude the transaction cost, their operating profit of $7.4 billion was up 36% from a year ago, with operating profit margin of 59% instead of 57%. If you exclude the costs from the acquisition of VMware, which looks like it was roughly $300 million for due diligence and consulting, etc., there's cost associated with making large acquisitions like this. So yes, Broadcom made an announcement for a stock split. A lot of investors were speculating that it was any moment now they would announce a stock split, especially after they realized just how much attention NVIDIA got after announcing the stock split. Speculation increased even more that Broadcom would announce a stock split. But for investors interested in Broadcom stock, now that they're going to be splitting their stock, these are things about the business that I thought every Broadcom stock investor or every Broadcom interested investor should know. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.